Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
Now we are 2 minutes away from the end of the trading day. Romaine Bostick, Taylor Riggs, Sonali Basak in for Caroline Hyde, counting you down to the closing bell. Here to help take us beyond the bell, our global simulcast, Carol Massar and Tim Stenovec, both here today, bringing together our Bloomberg Television, Radio, and YouTube audiences. Carol, this is an interesting day here because you have a little bit of stasis here. Maybe people are waiting for that payrolls report, or maybe they're just freaked out about something else.
Maybe they're freaked out. I mean, I can't kind of make sense of it. I feel like, is it Friday yet? Because there's been so much going on. But I do think there's a bit of a wait and see mode for tomorrow's data report. Remember, though, it's going to be backward looking, and the Fed's going to be looking for trend lines, Tim, and they also want to make sure that we're working off those 7 million Americans who are still out of work.
Yeah, backward looking is right. And the important thing to keep in mind here is it's still a time that reflects the summer when kids aren't back at school, when perhaps many parents who didn't have childcare options during the pandemic, who weren't working, didn't get back onto the sidelines yet. So I think that's important to take into account. And then also, of course, taking into account, Sonali, the unemployment benefits that in some states have yet to expire, have expired now, and we won't see that reflected until next month's jobs report.
Yeah, absolutely. Let's call it messy Monday. You have the jobs report tomorrow, but then that unemployment benefits conversation, that on top of evictions, you can imagine traders coming back from their Labor Day vacation and parsing through a lot of data that will be hard to really...
I'm not working on Monday. I don't know about you.
No. Tuesday.
Okay.
Tuesday is the day.
And Romaine, we know that you're so keenly focused on these equity markets. We quickly just talk about the uncertainty and the cues that we're getting within the bond markets as well. It is stable. We are unch on the day.
Yeah, we've been all over the map here on the indices here, and it's going to be a relatively unchanged day. Right now, for those of our viewers out there, you're seeing green on your screen. For those of you sort of listening to us on radio right now, here's the setup right now. The Dow Jones Industrial Average up about 130 points or so, up about 0.4%. The S&P 500 up about 13 points or 0.3%. The NASDAQ composite right now is higher on the day by about 22 points or 0.1%. Though we should point out that the NASDAQ 100 is actually going to finish the day in the red, down by about 7 points. The outperformer on the day, at least on a relative basis, I'm going to give you two outperformers actually. You got the Russell 2000, which is up about 0.7% here on the day. You did see a little bit of rotation back into some of those cyclical names. That was also evidenced, Carol, by the Dow Transports, which moved higher today, up about 1% on the day.
Yeah, I had the small caps up on my screen as well. Mid caps also doing fairly well, up about 0.4 as a group overall. What's interesting is you did see some buying on the S&P and the Dow into the close, so we did see investors kind of moving in those last few minutes of trading. Having said that, if I look at the S&P 500, 375 names higher. We had 120 losing some ground today and 2 unchanged. So we did see more of a risk on trade if you start to dig into how many gained, how many lost today.
Yeah, Carol, and I really love that you brought up some of that reflationary trade when you said you were focused on that Russell 2000, because you really see that on a sector level. For the radio audience, we're taking a look at the sector winners, the sector losers. It's a cyclical trade underway. It is energy, right? It's capital goods. That's up anywhere from 1 to 2.3%. You're throwing in some food and some staples in there as well, but we'll digress. For some of the losers, this is an interesting story as well. You're getting auto and auto components, some of the software and services, and then media, I would argue, Carol, it's down 1%. That was really what was weighing on some of the indices today.
All right, and let's get to some of the gainers here. Let's kick around Netflix, because that stock was up about 1.1% in today's trade, rallying to an intraday record. Citigroup raising its price target to $5.95 from $5.70. Stock closed at $5.88 and change, saying that it continues to have strong pricing power. That stock, 6 days of gain, so we definitely did see a move up there. Virgin Galactic, got to mention it because it was a gainer earlier in the session.
Keep an eye on these things.
I know Tim is like Massar. Tim's like Massar. You have to get it off the list. I'm like, I'm not, because it was.
I told you.
It was up 7.4%. It ended down.
I told you,
3%.
Carol, Romaine was going to give you a hard time.
Carol, did you hear about this flight thing? They deviated from the flight path.
I mean, you don't do that. You're going up into space. You don't do that, right? Check. There's a checklist. So anyway, so the FAA is not going to allow Virgin Atlantic to fly again, so they've got to work some things out with regulators. And I just got to mention,
they'll have to give refunds to people, like if they took them on a different direction.
Yeah, it's like, wait a minute, this isn't where we were going. I thought we were going towards this moon.
They've been waiting for a decade already. They can wait a little more.
I need to mention Match Group. It was up 6.1% today, top in the NASDAQ 100. Show of corporate activism, Match Group creating a fund to support staff impacted by Texas' new near total abortion ban.
All right.
So
Tim up
activism.
now with 2 decliners, 1 gainer.
Oh, yeah. How do I follow that?
That's for you.
So I want to talk Chewy. That was one of the stocks that I kept my eye on today. We talked about it a lot yesterday, finishing the day down more than 9.2%. Of course, sales outlook and guidance yesterday missing expectations. As a result, though, we saw price targets trimmed by Morgan Stanley, Barclays, JP Morgan, and Jefferies, all as a result. Shares down going into yesterday's session, 2.7% for the year, but still up more than 200% since the start of 2020 as consumers bought for those pandemic-induced lockdowns and to take care of those pets. American Eagle, keep an eye on that too, down more than 10%. Shares of the retailer plunging today after Q2 sales missed estimates. Shares still up, though, 35% year to date. Hormel Foods, people are not eating enough Spam, or maybe that Spam is just getting more expensive. They make Skippy, Jennie-O, Planters, and more. Declined the most intraday since November, down 4.6% at the end of the day. The company cutting its full-year forecast, saying there was a significant inflationary pressure in nearly all areas of the business, including raw materials,
Skippy
packaging,
Planters.
freight, labor, and other inputs. I know, the Planters is relatively new, too.
It's synergies if you count the peanut butter machine upstairs where you press a button and all of a sudden the peanuts turn into like live peanut butter. It's pretty incredible as long as the machine works, Tim. Don't break my machine.
There's no monocle Mr.
I have
Peanut
tipped that
up there.
machine upside down and get my peanut butter out because I want it.
So let's just quickly take a look at yields. It's not nearly as exciting as some of the winners and the losers that our radio co-anchors so nicely do for us here. Pretty unch on the day, I have to say it. Stable, 21, 77, 129, and a 1. Well, not even really, a 190 here as you go all across the curve. But this really, Carol, sets us up for, well, this stasis, right? And some of the pause button that we're seeing before that ever more jobs important data that we are looking forward to tomorrow morning.
Oh, there's a report tomorrow? I haven't heard about it. Yeah, it's the monthly jobs report. We know it's always important. And it is certainly going to shape maybe potentially how investors think about the trade going forward. And you got to keep in mind, those Fed officials are going to be looking for a trend line. Are we getting more people back to work? And then whether or not how they assess the jobs market, there's a lot of debate about whether or not they're doing it correctly.
Yeah, and the ranges that we're getting from economists are all over the map. You got a high of about 1 million. In fact, there are several people that are sort of clustered right around that 1 million mark in the 900s. Of course, the average right now is 725, and then you got a couple lowball estimates that are down in the 400,000 range. But remember, last time we were making fun of those people. Carol, I think that was that March or April report.
Yeah.
And of course, it turned out those people in the lowball ended up being close to right.
Yeah, exactly.
Yeah, but let's
So you gotta
also
be careful.
be clear here that a lot of the reason we're talking about jobs is not only because of this recovery, but also because of this talk about the taper. And, you got to wonder, how fragile is this market when it comes to that taper talk? And then you throw in Manchin on top of that, and then you bring in all this political uncertainty into the last few months of the year.
Yeah, Tip, this is really interesting, right? The divergence that we see, and we heard this from Tracy McMillan over at Wells Fargo Investment Institute today as well, that a taper, as we know, is a very distinct and separate issue than any sort of rate hike. And Powell, I think, really laying that out at Jackson Hole. And so you do wonder about anything that could throw off a rate hike that we learn tomorrow that is a very separate issue from a taper plan that we think is already underway for later this year.
Well, I got an eye on Hewlett-Packard Enterprise, also known as HPE, the company reporting earnings just now. The company sees fourth quarter adjusted earnings per share between 44 cents and 52 cents. That estimate's coming in at 49 cents, so really in line there. The company seeing third quarter net revenue 6.9 billion, estimates at 6.93 billion. The company's third quarter adjusted EPS at 47 cents versus estimates of 42 cents. The company seeing fourth quarter adjusted EPS 44 to 52, estimates at 49 cents.
Hey, speaking of earnings, DocuSign is also out. We're seeing that stock move in the after hours. Stock bouncing around a little bit. Second quarter revenue, $511.8 million. That's a beat, everyone. 485.5 was the estimate. Second quarter loss per share, 13 cents. The estimate was for a 35-cent share. That's year over year. Second quarter billings, 594.4, and the estimate was for 554.6. So a little bit better. And again, second quarter adjusted EPS, 47 cents, and that's 8 cents better than what the street was expecting.
Yeah, and of course, we're still awaiting, of course, results out of Broadcom here. Look for basically about 6.7 to 6.8 billion, in revenue on the quarter. At least that's what the street is looking for. But of course, more importantly, it'd be interesting to talk about that outlook here, that whole 5G rollout, and of course, the semiconductor shortage, how all of that folds into everything.
Yeah, and hopefully they're on the lucky side, Romaine. This earnings season is a tale of two cities. You see that with DocuSign. Strong response from investors. HP is not getting that same end of the coin. A lot of discerning here going on from investors in the market.
The one big question that we really didn't get to, Carol, was did you actually have one of those popsicles upstairs today?
I did not. I stay away from the ice cream.
Oh, okay, it's not ice cream.
Oh, well, what is it? What is it? Frozen water?
Ice. Yeah,
ice?
pretty much.
Did you stay away from them?
I could not.
Does everybody get ice cream?
It was a disappointment.
It's going to go away soon, guys, because it's the end of summer.
Oh.
I know.
Well, what do we get in the winter?
Long peanuts.
Soup.
Getting more peanut butter machines.
All right, someone get Mike on the phone.
All right, guys, I'm going to go on vacation, so I will see you in a little while.
Vacation? Oh, congratulations.
Thank you. Have a good holiday weekend. And our team, though, will be back here again, taking you through the close. Same time, same place. This is Bloomberg.